Ladies and gentlemen, good afternoon and welcome to Trishakti Industries Limited Q1 FY27 earnings conference call. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the management's opening remarks. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the management as on the date of this call. These statements do not guarantee the future performance of the company and may involve risks and uncertainties that are difficult to predict. I would now like to hand over the call to Mr. Karan Ajmera from Confidential Partners. Thank you, and over to you, Mr. Karan.
Yeah, good afternoon, everyone. On behalf of Confidential Partners, I welcome you all to the Q1 FY27 earnings call of the Trishakti Industries Limited. I'm Karan Ajmera, representing the Investor Relations team. We are pleased to have with us Mr. Dhruv Jhawar, who is the Chief Executive Officer of the Trishakti Industries Limited. Thank you all for joining us today. With that, I would now like to invite Mr. Dhruv Jhawar to share his opening remark. Following his remark, we will open the floor for the Q&A session. Thank you, and over to you, Dhruv.
Yeah, I'm audible, right?
Yes.
Yeah. Good afternoon, everyone, and thank you all for joining us today. It is a pleasure to welcome all our investors, analysts, and stakeholders to discuss Trishakti Industries' performance for the first quarter of FY27. I am delighted to share that Q1 FY27 has been a defining quarter in Trishakti's growth journey, reflecting the successful execution of the strategic transformation we initiated over the past 2 years. Our continued investments in fleet expansion, customer acquisition, operational excellence, and execution capabilities are now translating into strong and sustainable financial performances. During the quarter, total income increased by nearly 310% year-on-year to 1,680 lakhs, while EBITDA grew by approximately 4 times year-on-year to 1,087 lakhs. Despite significant business expansion, we continue to maintain a healthy EBITDA margin of approximately 65%, demonstrating the strength of our business model and operating leverage. Profit before tax increased to 538 lakhs, and profit after tax rose to 430 lakhs, making this the strongest quarter financial performance in the company's history. Our operational performance remained equally encouraging. We continue to maintain 100% fleet utilization, reflecting the strong demand environment and the efficient deployment of our equipment across multiple infrastructure projects. Our expanding fleet continues to support marquee customers across sectors including renewable energy, infrastructure, railways, steel, oil and gas, and industrial projects. The macro environment also continues to remain highly favorable for us. India's infrastructure investment cycle is gaining further momentum, supported by record government capital expenditure, increasing investments across transportation, energy, railways, urban infrastructure, and renewable energy. These structural tailwinds continue to strengthen long-term demand for specialized heavy equipment rental services. During the quarter, we also announced 2 important strategic initiatives that will support our next phase of growth. We also announced our strategic entry into the wind energy equipment rental segment, positioning Trishakti to capitalize on growing demand for specialized heavy lifting solutions in India's renewable energy sector. Second, we announced our intention to expand our operations into the United Arab Emirates and Kingdom of Saudi Arabia, subject to the necessary approvals and execution milestones. We believe these markets offer attractive long-term opportunities driven by large-scale infrastructure developments, industrial expansion, and energy investments. These initiatives will significantly expand our addressable market while strengthening our long-term growth platform. Alongside growth, we remain committed to disciplined capital allocation, improving fleet productivity, enhancing operational efficiencies, and maintaining healthy returns on capital. As we continue to scale our business, our focus remains on creating sustainable long-term value for all our shareholders while strengthening our position as one of India's leading infrastructure equipment rental companies. I would like to sincerely thank all our customers for their continued trust, our employees for their dedication, our lending partners for their support, and our shareholders for their continued confidence in Trishakti Industries. With that, we would now be happy to take your questions. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and one on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and one again. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The first question comes from the line of Chaitanya Pujara from Arihant Capital. Please go ahead, sir.
Hi, am I audible?
Yeah,
Yes,
audible.
Hi, congratulations firstly on a great set of numbers. Just wanted to ask, what is our current fleet size in terms of numbers?
Current fleet size is approximately anywhere between 155 to 158 machines. We are in the process of building a few more machines in the coming week, so it is around that number.
Sure. Could you also please throw some light on the new segments that we have, entered, the wind energy rental segment, like what kind of, gross or net yield that we can see here? What is our investment plan in that segment? Likewise, what is the payback period and what kind of clients we'll be catering to? Or is there any order book in that segment yet, and when can we expect that to go live?
So, see, basically in the wind energy segment, the machines used earlier were around 800-ton category machines. But now the shift is happening towards 900-ton machines, and this is over here we are getting the first mover advantage, because in October the first few units of the 900-ton machines are coming to India. So the reason for us to expand into wind energy is because the 800-ton machines were used for 3.3 megawatt projects, but now the industry is moving towards 5 megawatt wind turbines. So for this, the 900-ton machines are required, hence we are seeing a good opportunity here.
Okay, do we have any existing client base that we are catering, or this is like a strategic initiative for the future?
Yeah, this is a strategic thing for future, because currently we are not supplying to the wind energy segment particularly, because the wind energy segment requires a minimum of 800 ton and above machines. So right now we are in talks with a few of the largest wind energy EPC companies in India, so with whom we will be joining hands in order to supply these machines. And when it comes to the yield and all, the yield is quite similar to the current machineries, but the advantage here is that the 900 ton and above machines are very expensive on INR terms. So to do capex here, if we get a longer term project, and doing a lot of capex here actually makes a lot of sense, since this will help us keep our fleet utilization above 95%.
So, sir, the current capex that we have planned for the year, does that include the one for the wind energy? How much would that be as a percentage, or in dollar terms?
Yeah, so we are in when we announced our net capex journey, we had announced a 400 crore plan. So out of which approximately 270 crores are already done, which you all can see it in our books as well.
Right.
Now the remaining 140 crores is left. So if we go for wind energy only, then we can easily finish off this set of like the remaining 130 odd crores just by buying 4-5 machines of 900 ton as well. So that is a possibility, but I'm not saying that we will do that only. Wherever the demand is coming, we keep on fulfilling it according to the market. If somebody is asking for 26 meter AWP, we'll give them that machine as well. If they're asking for a 400 ton machine, we'll give them that also. If they're asking for 80 ton also, we'll give. So according to the demand, whatever demand comes to us first, accordingly we'll be doing the CapEx.
Sure, sir. But in terms of yields, they yield similar to what our current fleet is. Am I right?
Yes.
But
The
they are
yield
just
is quite
longer in
similar.
nature
Yes.
in terms of contract.
Yes. Because till
Hello.
2030, this segment is going to become almost 5 to 7 times from here. So because India's renewable energy need is only a lot. So what we are doing is that, see, as I told you, for the 3.3 megawatt turbine, 800 ton machines are used. For the next 5 to 7 years, now those machines, now the requirement will change to 900 ton machines because of the boom length difference. So over here, we are seeing that if we get into this segment right now, it will become a very good thing for us, that the demand for these machines will always be there.
Right. Sir, so the current 270 crore CapEx that we have done till date, out of that, how much is actually part of the gross block as we speak, as of this quarter?
The cumulative gross block has already touched the said number, 270.
Sorry? So this
So this
on
270
the
is
balance sheet.
yeah, balance sheet. See, this, if you remove the GST component as well, then we
Yes,
should be
yes.
at around
Excluding
235,
GST amount.
240. Yeah, it's around 235, 240.
All right. And, sir, what is the status of our borrowings repayment schedule?
Currently, we are at a very healthy cash flow right now, because when we started doing our CapEx initially in 2024, 2025, then all those machines were funded at a 3-year finance instead of the industry standard of 4 to 5 years. So in 2028 calendar year, we'll be like 2027, 2028 calendar year, a few of those machines will start generating operating cash flow positive. So they'll become operating cash flow positive. So that will increase our free cash flow even more. So right now, the borrowings are currently at approximately 80 to 85 crores.
Okay. And sir, the kind of run rate that we are going, if you can just elaborate on that.
Yeah. So currently, see, last year we did massive CapEx, and we had guided for 100 crores of CapEx. We ended up doing 210.
Right.
So that is the reason why whatever investments we had actually done at that point of time are now starting to generate top line, bottom line, higher EBITDAs from this financial year onwards. So looking forward, currently our order book, which is executable in this year, is approximately 70 to 72 crores, which will be executed in this financial year. So by seeing that, we can say that we shall be doing like a good 60% of EBITDA, 60-65% of EBITDA, and around PAT margins of 25 to 30%. Yeah. This is our current order book. From now, whatever machines we will be adding more to our fleet, this will be added to the ARR we are currently at.
Right. And sir, any visibility for the year, going ahead?
Yeah. So, see, when we talk about wind
Like
energy and
FY28,
also...
I mean.
Oh, yeah, FY28 you're saying. See, whatever CapEx we will be doing in this financial year, it all depends on the timing. I cannot give you exact FY28 estimates also right now, because if we, like the wind energy segment which we are starting, the machines have a lead time of 4 months. So we have already ordered the machines. The machines will come in after 4 months. If there is a 1 month delay, then for us to give you an estimate is very difficult. If you ask me the same thing in December quarter phone call, I would rather give you a better estimate.
Fair. Last question from my side. Sir, if you can elaborate on the UAE, expansion of, geography that we have planned. Like, what is the exact plan? What is the reason for it? What kind of margins you are expecting from that segment? And what utilization do you see from that UAE expansion? Or do we have any leads from that region as we speak?
Yes. So we honestly do have a lot of leads from this region, because of only one reason, that we are currently working very closely with L&T, Afcons, and all these KC and all these bigger companies who have themselves expanded their EPC work to the UAE and KSA. So we have already got a rough idea about how many machines there will be required in future and all these things. So that is the reason it's not that the contracts have been signed yet, because the paperwork takes a lot of time. So that is why in the next few quarters, we'll be expanding into UAE, KSA, and we'll be starting our similar business over there only. When it comes to the yield and all, what we have seen and what we have quoted till now, what we can understand is that the yields will be approximately 4% or so on a monthly basis, in which in India it is roughly 2.5% right now. So we feel that that is a very good opportunity that we should invest. Actually, I'll tell you one more thing. We thought that we were quite late because of the amount of CapEx we have done last year. So we could, it was not in our bandwidth that we could actually expand into UAE last year. But because of the war happening, everything has come back 2 years. So this is one more reason why this time we are very confident in expanding over there, because luckily, all the structural damages and all which has happened in the UAE now will require a lot of maintenance jobs and all. So this sector we feel will be growing at around 12% or so every year in the KSA and UAE areas.
Sure, sir. Sir, one last thing. With regards to our debtor days, if you can, elaborate on how we can, streamline that into a much better, cycle, because right now I think we are at 200 days.
Yeah. So if you actually do a deep dive in the annual report, you will be seeing that from the core business which we are doing, the payments we are receiving is under 60 days. So if you see under 60 days to 90 days, there is not much receivables at all. Very, like from our top line we will be having this year, it will be a very small chunk. So in this financial year, you'll be seeing that everything will be streamlined back to like it should be in this financial year.
So can we expect it to, come under 60, 70 days?
Yes, absolutely. 100%.
Sure. That is it from my end, and thank you so much for answering, and good luck for, this coming financial year. Thank you.
Thank you very much.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The next question comes from the line of Mr. Yash Junjunwala, an individual investor. Please go ahead, sir.
Yeah, hi. Am I audible?
Yeah.
Yeah, hi, Dhruv. I actually wanted to know, is there any change in your CapEx plans considering the entry into UAE and Saudi Arabia? Are you all planning to increase the amount of CapEx you all want to do?
Yeah. So the UAE plan will be laid out in the next few months, because currently we are getting RFQs for UAE and the KSA specifically. So we need a few months in order to talk to our clientele and all. The announcement we have made was only for the step which we are taking by doing the company incorporation work and all. We are starting now. I personally feel that by next month end, we should be getting a very good idea from our current clientele that how many machines, at what tonnage machines do they need and where do they need it. So with those data coming in, we will be able to guide a proper roadmap about in which quarter, how much CapEx we are going to do in UAE, KSA, etc. The CapEx plan will, of course, it will become significantly faster, because what we had guided last year, we have 2 years back, we have almost achieved the CapEx number. So once we are done with this CapEx, then we'll be announcing further the CapEx plan as well.
I'm sorry, from the number I know is that you all had guided for around 400 crore rupees of CapEx, and out of which you all have roughly done 270, including GST.
Yeah.
So the remaining 130.
The remaining 130 will be done in India itself. It does not.
And in FY27?
Yes, in FY27 only it will be done.
Okay. And any plans of
Whatever the
increasing it in
CapEx we
India?
will be doing in. Yes, of course. We will be See, in 2028, most of our machines are going to become even more cash flow positive because the bank financing and all will be completed by that time. All the debts from those machines will go off. So once we have that kind of cash flow as well, we will be reinvesting the amount back into buying more machines for sure. To achieve the 400 crore number for this year, it does not look very difficult because since we are entering into wind energy, then the ticket size per machine is quite high over there. So even if we just buy 900 ton machines, then we are done with the 130 crore expansion which we are pending.
Understood. My second question is, from what I understand, our business model is that we get financing from, where we don't have to pay upfront for the cranes, and then we have to pay after 2 years, I see.
No,
So
it's not that.
what happens? Okay.
Yeah. So see,
Can you explain how this?
Yeah. So if you see, we had raised 2 equity rounds also, which included around a net raise of 40 odd crores. Then we currently have a fleet of, let's say a hypothetical number as 250 crores. Then if you just add up the debts we currently have, so the debt has also been repaid on a monthly basis since the past 2.5 years, right? So the current LTV on that 90 crores of debt is currently at around 60%. So if you do the math here, then it is 150 plus the 42 we have raised, plus the internal accruals we have done, plus the GST sums up to 270. So if you see the balance sheet and add up everything properly, so you will get the exact number. So this is how we are funding our CapEx with the internal accruals.
Okay. So, can you just explain how how the funding of it is working? Like, let's say if I want to place an order today for a new crane, how much payment do I have to pay upfront? And then what does the payment schedule look like if I have to buy a crane worth, say, 20 crore rupees?
Yeah. So we go to a normal bank like HDFC, Axis, ICICI banks and all. Since we now have a very good track record, earlier we used to pay a 20% down payment for the machines. Now, since we already have a very good track record and the LTV with these bankers are currently at 50 to 60%. So for them to fund us 100% of the machine is also very easily possible now. So that is the reason why we don't have to pay any upfront costs. We just have to pay for the transportation and the insurance of the machines, and we do a proper bank financing. Yeah.
And
this is how we are working.
Okay. And the interest payout starts from month 1 itself?
Yes.
And what is the rate of interest?
There's a 1-month moratorium as well. Yeah. So currently, the rate of interest varies from every bank. Like HDFC's cost of borrowing from our perspective is the lowest in our loan book right now. So currently, the average must be around 8.5 to 8.75, somewhere in between that. Because the initial loans which we had taken was at a significantly higher interest rate. It was at 9.75. But since those loans have been repaid significantly, and now the new funding which we are taking is at a very comparatively a cheaper rate. So that is the reason why our borrowing cost will also come down in the next few quarters.
Understood. Thank you, and good luck, Dhruv.
Thank you.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from the line of Mr. Satya Mehta, an individual investor. Please go ahead, sir.
Hello. Hi, Dhruv, sir. Many congratulations on a great performance. I hope I'm audible.
Yeah.
So my question is, there are 2 things. One is, the 270 crores that we already have, is all of that deployed already, or is there a lag in which after the CapEx is done, the deployment happens?
Yeah, there is a lag, if I'll be very honest. We are at currently a 1.5-month lead time right now. So the CWIP machines which we carry forwarded in the last year, it was around 27 or 28 crores. So those machines actually started to generate revenue at, I think, just 1.5 months before. So that is the reason why 2 months of machines revenue have not been counted in this quarter's top line.
Right. Got it. The second question, sir, is we are saying that we are at 100% utilization and our EBITDA is also higher than the industry. What is core reason for that? Why is our utilization and EBITDA so much better than the industry?
Yeah, see, most of the companies have got very old machines. If you see, like I can't take names, but most of the machines on an average are 12 to 15 years old when it comes to our competitors. But when it comes to us, all our machines are 2024, 2025, 2026, and now 2027 make. So that is the reason why for the first 3 years we don't have to think about the maintenance part a lot, because our OEM takes care of it for the first 2-3 years, or the first 3 years. Post that, I totally agree the margins will drop down, but we have been saying the same thing since the past 7 or 8 quarters since we have started our con call, that there will be a maintenance CapEx of maintenance like OpEx cost of around 4 to 5% in the future. Once the machines FOCs have been finished, after that we'll have to invest in those things. So currently we are at 65% margins. Eventually it will drop down to 58 to 62%.
Right. Got it. Sir, one last question on the UAE and the Saudi side. The plan that we have of entering over there, what's the scale that we are expecting to achieve roughly over the next 1 or 2 years in terms of the CapEx or in terms of top line?
Yeah. So let me tell you about these things just with one company's CapEx. Okay, I'm not talking about the market itself. L&T has won 15,000 crores worth of orders in KSA. It's a 10,000 crore single order in renewable energy and a 5,000 crore single order in renewable energy. So when it comes to these kind of CapEx happening with these EPC companies, then obviously they will be requiring cranes, man lifts, hydraulic grabs, many such equipments. So to tell you the exact market size is very difficult, but the amount of CapEx which is being done, we will very shortly come up with a proper roadmap about our UAE and KSA expansion. But we feel that in the next 2 quarters or so, we should be deploying our machines there. In the next 2 to 3 quarters.
Right. And the utilizations are there as well. We expect 100% to continue. We see the demand to be strong going forward.
Absolutely. 100%. We already have signed orders till this financial year end. So until the client is de-hiring us, we should not be going below 98-99% for sure.
Is it that you are talking about India, or you are talking about UAE and Saudi?
India. Currently India.
Right. Got it.
See, whatever CapEx is happening in UAE now, I'll tell you, if I'm being very honest right now, the only reason we are looking forward to expanding into UAE is because of this war, everything has gone back 2 years, 3 years. So we thought that we were anyways late to the party. Now we feel that since everything has gone back and taken 2 steps back, so now to have a good exposure there will make a lot of sense for us.
Right. Got it, sir. I'll fall back in the queue. Thank you.
Sure. Thank you.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from the line of Mr. Rohan Mehta from Ecom Advisory. Please go, sir.
Hi, am I audible?
Yes,
Yeah,
sir.
you're audible.
Perfect. Thank you so much for the opportunity and congratulations on a good set of numbers. So, I apologize if I missed the initial address. I have a few questions on the KSA market. So, given our, strategic push into both UAE and KSA markets, have we reached a theoretical limit or, ceiling for profitable fleet expansion within India because of intensifying domestic competition? That's first part of the question. And also, is this geographic pivot, driven by limited incremental returns in India or purely by better opportunities internationally in the form of, much more higher yielding asset?
Yeah. So let me answer your second question first. So basically, see, the reason why we want to do a UAE expansion and KSA expansion is because our clients have asked us for it. So if I'm meeting my clients on a weekly basis, like L&T, KEC, Afcon, Reliance and all, and those companies do have opportunities somewhere else where they want to get the Indian companies to go to KSA and supply them the machines. So that's a good thing for everyone, if you technically see. Plus, the second thing is that the yields in the KSA market is significantly higher than the Indian markets, but the cost of operation is also quite high. Over there, getting an EBITDA margin of 50-52% will be a very good deal for us. But the demand is just, again, starting to grow over there. Last 6 months, there has been a complete halt in the demand side in the KSA market, which I feel in the next 6 months, all these things will be back to normal. So if we can actually monetize this opportunity in the next 3 or 4 months, or do like form a company over there, start taking some orders and start expanding slowly, it will be a very good decision. And see, when it comes to the Indian, coming to your first question, in India, there is too much demand right now. Like if I can have the opportunity to having 1,000 crores of cash with me right now, I can give it to you in writing that it will take me 3 to 6 months to deploy the whole 1,000 crores of fleet. Because Reliance and all are coming with projects like the Kutch expansion which Reliance is happening, which they had announced in their AGM. So all these things are now coming in post monsoons. So I'm not saying that the Indian markets is not good. That is the reason why we are wanting to shift. It's just that wherever we get the opportunity, we would like to expand there. At the end of the day, it does not matter that who has 1,000 crore, 2,000 crore, 5,000 crore fleet. Everything matters. The only thing matters is the fleet utilization. If we diversify geographically also, then that helps our fleet utilization to be significantly higher in future. So because of these kind of expansions, like changing our geographies and doing maybe 200, 400 crores of capex over here, then another 300 crores of capex somewhere else. So that will actually make our fleet utilization very stable in the 90s. And product portfolio also, we have to make sure that we have a good product portfolio, because without a good product portfolio, again, being at a high utilization is very difficult. The wind energy segment also, why we want to get into it, the returns are similar to the current fleet we have, but the advantage is that the ticket size is significantly higher. So the smaller crane rental companies will never be able to buy a single machine for 25-30 crores. So that gives us an exclusivity also. And if we are getting a 2-year, 3-year, 5-year demand clarity, then why not? Earlier in the previous phone calls also, I had said that wind energy is not something which we are looking into right now, because up till December, January, the companies like Suzlon and Renew were only focusing on 3.3 megawatt, so in which the 800-ton machines are required. Now the 800-ton machines, the market has been flooded by the 800-ton machines. So now when they are moving to 5.2 megawatt, then they require a larger size boom, which only a 900-ton machine can give. So hence we feel that in this particular segment, if we enter right now, again, it gives us a good demand clarity for the next 4-5 years.
Got it. Thanks for the elaborate answer. Just to follow up on the KSA market. So, large established peers like, Sangvi, they also operate in the KSA market, and, with them, they command a significant scale advantage, the fleet depth, and also because of that, they have some pricing leverage. So I'm just trying to understand that, given their strong presence over that market as well, what is specifically your right to win in that market, and how do you plan to, differentiate yourself to capture market share against probably such a player like Sangvi?
Yeah. So see, I'll be very honest with you, the market is too huge for anyone to give so X amount of machines. Now, the thing is that we don't see that we have to compete and get, like, if they are doing a 300 crore CapEx, we do a 400 crore CapEx over there. That's not how it works. So we are only focusing on certain projects, be it in India or be it in UAE. In UAE and KSA, we don't want to be like that we'll give this company 2 machines, this company 5 machines, this company 10 machines. We would rather want to work with a specific set of clientele where we can give as much machines possible from our balance sheet perspective as well. When it comes to the pricing power, then currently the supply, there is a very big constraint in the supply part, where be it Sangvi, be it Barkat, be it any big company, it is very difficult for them also to supply the need which is there. So for us also, it's not that we are competing. The market is already too big for everyone to take a good chunk out of it. This is what we have been seeing till now.
Got it.
Call is no longer being recorded.
You had mentioned the EBITDA margins on the KSA business. They're somewhere around 50 to 55%. That's correct, right?
50 to 52%. See, this is the groundwork which we have done till now. We are saying on the basis of that, eventually when we actually start working over there, see, we make Excel and all, like everyone does that, right? So on Excel, we don't actually see that there are, like, some miscellaneous expenses can be added, some can be waived off as well. So according to our calculations, being at a 52% EBITDA margin in KSA is actually a good thing.
Got it. Thank you. Thank you for answering my questions, and wishing you all the best.
Thank you.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. The next question comes from the line of Mr. Het Lidia from Tiger Assets. Please go ahead, sir.
Hello, am I audible?
Yeah, you're audible.
Hi, sir. Congratulations on your good results. So actually, I just wanted to know that is there any tie-up with any manufacturer for, purchase of cranes or machines? Or are we in line to have any tie-up that, particularly they will just provide to us?
We cannot have any such tie-ups with anyone because we are not wanting to become dealers, right? So we are wanting to be in the renting space itself. But yeah, there is no scope of any tie-up with any company. We are currently only wanting to be a pure play rental model. So yeah.
Okay, and as well, what are the plans of the company regarding the EV machinery? We had posted a release regarding the EV machinery, right?
Yeah, so we'll be buying our first EV machines in Q2 itself. So we have already ordered a few machines for 2 of our clientele. So since the EV machines have a lead time of around 2 months, so that's why it's currently getting manufactured. As soon as we get it in India, we'll be supplying it to our clients.
Okay. So, like the cost of the EV machinery is similar to the normal cranes?
It is approximately 5% more, like it's costlier than the normal machines, like the diesel machines. But see, again, the same thing comes. For us, it is the same thing because after 2-3 years, when the FOCs pass out, then our OPEX becomes 5% of the 5 to 7% of 5 to 6% of the top line. But in this case, there is no need for an OPEX, so the margins will be higher. So it's all about how you diversify your fleet, so that like you can be at a higher utilization.
Okay. Okay. Understood. As well, just a small query regarding, the diesel cost. Like, what is the structure regarding the same? Like, do we bear it or does the client bear the same?
The client bears it. So we don't bear the diesel cost. No, from our side, the total expenses which comes to our P&L is the cost of the operator who drives the machine, the cost
Okay.
of the helper, and the fooding of our laborers, and uh, like and like we provide a place for them to live as well. So those rentals
Okay.
also. Yeah.
Understood. Understood.
Yeah.
Thank you so much for the questions and all the best.
Yeah. Thank you.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The next question comes from the line of Mr. Raghav Srivastava from Waterstone Capital. Please go ahead, sir.
Hello, I'm audible?
Yeah, you're audible.
Yeah. Hi, sir. So I had this question, like, as you're entering into new business verticals, so do you plan to strengthen the leadership team with, who have those industry-specific expertise, or you would be even continue with the existing management team?
Yeah, the existing management team, I feel, is quite good enough to expand into these things. And when it comes to the head of departments, we have currently hired a few people who are having 20 to 25 years of experience in the wind energy segment, and they have already joined us as well as HODs. Yeah.
Okay. Got it. Yeah, so my next question was, so as your business expands into, new geographies and sectors, so how should investors, think about capital allocation priorities, I mean, over the next 2 to 3 years? Can you just throw some light on it, about capital allocation?
Yeah, capital allocation for like India will be our major priority for the next few years, because we don't see the demand going down because of many mega projects which will be opening up from October onwards. So the demand will anyways be here. When it comes to outside of India, when we expand in the UAE and KSA, we'll be allocating a certain budget over there, and we'll be doing our expansion with that particular set of budget only. And whatever the internal accruals will be there, we'll be expanding through that. So those
So-
in the outside, it's a longer term vision when it comes to UAE and KSA, that because the rental yields are also significantly higher over there. So to expand at a faster pace with the internal accruals will be a smarter move over there.
So mostly you would be expanding via, internet accruals, right? Am I right?
Yes.
Okay. Yeah. It's just last one question I would like to squeeze in. So have you already secured any customer inquiries or LOIs or projects in the wind energy segment, or are there discussions currently underway?
There are many discussions happening on the way right now. It's just that since the lead time for the machines is significantly higher than the normal machine we keep purchasing regularly, so that is the reason for us to get long-term projects is easier, because the lead time is a lot. Plus, there is one more thing, that the two global leaders of 900 ton and the OEMs, the manufacturing leaders are SEMI and XCMG. So what I feel from their factory visits and all, that each of these companies cannot manufacture more than 2 machines per month. So anyways, like, we have ordered a few machines already, so we do have a lot of time in order to like, whenever the requirements come, we do get a good 2-3 months advance LOIs and all.
Okay. Got it. Yeah, that's it from my side, and all the best, sir. Thank you.
Thank you.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. I repeat, if you have any questions, please press star and one on your telephone keypad. The next question comes from the line of Mr. Anshu Sharma from Vortex Capital. Please go ahead, sir.
Yeah. Hi, am I audible?
Yeah, you're audible.
Yeah. Hi. Firstly, sir, congratulations on a good set of numbers. So starting with financials, so as I can see in Q1 FY27 alone, we have clocked in both top line and bottom line, like half of what which was in FY26. So just wanted to ask, like, how do we, expect for Q2, Q3, and Q4 for this year?
Yeah. So see, currently, the executable order book which we have right now is around 72 crores. So we can assume that we shall be gaining around 60% EBITDAs on this number on a conservative basis, and around 25 to 30% PAT margins as well. And whatever machines we will be buying from here onwards will have a lead time of around 1.5 months to start generating revenue. But as soon as those machines start generating revenue, this number will keep going up.
Okay. Got it. And, sir, regarding the UAE and Saudi Arabia expansion, will Trishakti Industries establish its own operation overseas? So will it be completely independent, or are we, sir, evaluating partnerships, joint ventures, or any other local collaboration for the same?
No, it will be done only by us. No local collaborations.
Okay, got it. And lastly, which sectors in the Middle East are we targeting initially? So, like, is it renewable energy? Is it oil and gas? Is it infrastructure, ports, or other industrial projects?
You're talking about India or KSA and UAE?
No, this is regarding UAE and Saudi Arabia expansion.
Yeah, mainly renewable energy, because right now, at least, see, for us to have an entry in these places, we are going through the Indian companies itself who are working over there, and then we slowly expand to the local companies over there as well. So right now, the kind of contracts which the Indian companies like L&T and all have won over there are majorly 95% of those contracts are renewable energy. So that's why we'll be entering this market through from this sector itself. Once we have entered and we have established and the operations are smoothened out, then we'll go for other clientele as well.
Okay. And sir, this last question, what is the expected timeline for this? So can we expect it to start from this year, FY26, FY27,
Yes,
or
yes.
will it take much time?
No, we will start it this financial year only, for sure.
Okay. Got it. Yeah, that's it from my side, sir. Thank you so much.
Yeah. Thank you.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and one on the telephone keypad. The next question comes from the line of Riya Shah from RK Securities. Please go ahead, sir.
Hello, am I audible?
Yeah, you're audible.
Yes. So I had a couple of questions. So, like, regarding the market, like, how competitive is the wind energy equipment rental market? And, like, how does Trishakti, like, differentiate itself from other crane rental companies?
Yeah. So see, the market is very big right now because the industry, that is a very big industry shift which is happening from 3.3 megawatt to 5.2 megawatt. So, the 900-ton machines which are introduced by the OEMs, like, this is the first set of machines which are coming into India. So it's not that we have a much differentiating factor in this case, because it's all about scale. The smaller companies cannot possibly go for such higher level of capex. So the number of people doing this capex will be very limited in India. So over there, we want to be the first mover. We want to get the first mover advantage over here, because first of all, the lead time for these machines are significantly higher. Plus, the capacity from the OEM side is also not a lot. It's like maximum 4 to 5 machines on a collective basis per month. So irrespective, like, this is the entry barrier for any other company and with respect to us. Because the machine is only not available and we have ordered like a few machines, and obviously, like, how will anyone enter this industry?
Okay, understood. And when do we expect the wind energy business to start contributing meaningfully with respect to revenue and profitability?
Q3 and Q4, because currently the machines will take 4 months time in order to be manufactured. then it will come to India, it will be transported. Like, so net around 5 months of net lead time will be there from now, from revenue generation perspective.
Okay, okay. And last question, do you expect the margins in this wind energy projects to be higher or similar or lower to your existing crane rental business, or like?
No, it will be very similar. It will be slightly higher, but to be on the safer side, we can say that it's going to be almost very similar to the current fleet we have. The advantage that we get in this kind of fleet is that the amount of CapEx which we do will be significantly higher from the current set of CapEx which we are doing, because the ticket size is significantly higher.
Okay, sir. Okay, okay. That's it from my side. Thank you and congratulations.
Thank you.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. I repeat, if you have any questions, please press star and one on your telephone keypad. We have follow-up question from Mr. Chaitanya Pujara from Arihant Capital. Please go ahead, sir.
Hi, Dhruv. Just to clarify, the remaining 130 crore of CapEx that we have planned for the year, out of that, how much have we placed an order for, or how much have we, gotten into production? Like you mentioned about the wind energy rental equipment that, will take 4 months to manufacture.
Yeah.
So what in dollar terms, how much of that have we, already placed orders for that we can expect in the next, 4 or 5 months?
Approximately 70% of this has already been placed. But see, we'll be introducing few new machines as well. Like, we'll be entering into tower cranes as well, which we have not announced yet, because again, there is a 3-month lead time for those machines as well. So these machines will be used for data centers and all. So whatever data centers are being made, there will be a very there is a major shortage of 80-ton tower cranes in the market right now. So we have ordered a few machines of those as well for specifically data center jobs. So with all these CapExes include, we currently have approximately 100 crores worth of CapEx, which we have already planned and placed an order for.
So we can expect that to go live within the next 4 or 5 months. Am I right in my understanding?
Yeah. So if you honestly see, then the 4 months is the lead time for transportation, and all it will take another 1.5 months. So to be on the safer side, saying 5 months will be much better.
Sure. And the realizations from those machines, like the utilization levels, will you say that it will take a little bit of time for them to reach higher utilizations, or there is demand strong enough to start immediately lending them out?
See, we can get the contracts right now also, the LOIs. The demand is not the issue, the supply is the issue. If our manufacturers are not being able to manufacture more than 2, 3 machines, 4 machines a month, then obviously there is a very big problem on the demand side, on the supplier side.
Fair.
So that is the reason why we want to enter with at least 2 to 3 machines. So let's see, in the next, maybe in December quarter's phone call, I can give you a very big and proper explanation about what machines we have got, what machines are still pending, what is the roadmap for FY28. So I can answer all these things in December quarter's phone call.
Fair. Okay. Thank you so much.
Thank you so much, sir. Ladies and gentlemen, if you have any questions, please press star and one on your telephone keypad. The next question comes from the line of Mr. Chintan Patel, an individual investor. Please go ahead, sir.
Hello, am I audible?
Yeah.
Okay, so my question is, what is annual recurring revenue for this financial year?
It's around 70 to 72 rupees.
71, 70. Okay. Thank you.
Yeah.
Thank you, sir. We have a follow-up question from Mr. Satya Mehta, an individual investor. Please go ahead, sir.
Hi, Dhruv sir. Thank you for the follow-up.
Yeah.
Just want to understand, is there any seasonality in the quarter? Is Q2 softer because of monsoons or anything?
See, for the companies who are doing like new set of CapEx, for them, obviously, to do more CapEx in this particular quarter is very difficult because the demand is almost not there only. From October, November, the demand kicks in again. So generally what happens is that this, if you already have signed contracts and you are at 100% utilization, then your top line, bottom line, everything should be safe. But from the CapEx perspective, to do a lot of CapEx in this quarter is a bit difficult.
So, do we have signed contracts for Q2, trying to understand for our company?
Yes. We are at 100% utilization, and for this whole financial year, we have signed contracts.
Got it, sir. Thank you so much.
Yeah.
Thank you so much, sir. There are no further questions. Now I hand over the call to the management for the closer comments.
Yeah, hi. So I would like to thank every one of you to join our con call. It's been a great pleasure to talk to you all, like every quarter. Making you all understand is quite a good thing for me also, because we want to create as much investor awareness as possible. So, thank you all for all the insightful questions and for the continued interest you have shown in Trishakti Industries. And we also truly value the engagement and constructive feedback from our investors and analysts, as it actually helps us continuously strengthen our business and our communications with the investment community as well. So thank you, guys.
Thank you so much, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and using Doorsaba's conference call service. You may disconnect your lines now. Thank you. Have a pleasant day.